Facilitation of IT companies, complete explanation for bank staff. When an IT company approaches Bank Islami to open an account or handle their export proceeds, the bank staff play a key role in ensuring the process is smooth, compliant, and efficient. The IT industry is one of Pakistan's fastest-growing sectors, contributing valuable foreign exchange earnings through software exports and IT-enabled services. Therefore, the State Bank of Pakistan (SBP) and Bank Islami have provided special facilities to support these companies. This explanation will help every staff member understand what to do step by step, from identifying an IT company to explaining account benefits, managing export proceeds, and following the rules related to foreign currency accounts. The first and most important step for any bank officer is to correctly identify whether the customer qualifies as an IT company. An IT company includes all entities, whether a sole proprietorship, partnership, or private limited company, that are registered with the Pakistan Software Export Board (PSEB) or the Pakistan Software Houses Association (PSHA). These companies are engaged in exporting software, or IT-enabled services. Examples include firms developing mobile apps, websites, providing remote IT support, managing call centers, or offering data entry and accounting services to foreign clients. Once the bank staff confirm that the company is officially registered with PSEB or PSHA, it should be treated as an IT exporter under the Bank Islami Facilitation Program. After confirming registration, the next step is to collect the required documents. The documents are standard and include a filled account opening form, CNIC or NICOP copies of all directors, partners, or authorized persons, the company's NTN certificate, and the official registration certificate from PSEB or PSHA. If the business is registered as a company, a copy of the SECP incorporation certificate should also be obtained. If the owner is a foreign national, then a valid passport must be collected. In addition, an authority letter specifying the persons authorized to operate the account is needed. Once all documents are complete, the staff can proceed to open the accounts. For IT companies, Bank Islami provides a dual account facility, the primary PKR account and the linked exporter's specialized foreign currency account (ESFCA). These two accounts must always be opened together. The PKR account is used for local transactions, while the ESFCA is used to receive and hold export proceeds in foreign currency (USD, EUR, etc.). The ESFCA is a non-checking account but is directly linked to the company's PKR account for easy transfers and conversions. Bank staff must ensure both accounts are opened under the same SIF and dedicated IT exporter's GL code. The turnaround time for account opening is the same day once all requirements are fulfilled. After opening the accounts, it is essential for the staff to clearly explain the benefits of this facility to the customer. Many IT company representatives are not aware of the advantages they receive under SBP's and Bank Islami's facilitation program. A proper explanation helps build customer confidence and ensures smooth usage of services. The first major benefit is foreign currency retention. IT companies are allowed to retain 50% of their monthly export proceeds or $5,000 US, whichever is higher, in their ESFCA. This means that if an IT company receives $10,000 in export payments during a month, they can keep $5,000 in their ESFCA in USD form. The remaining $5,000 will be converted into PKR and credited to their local account. For companies earning up to $5,000 a month, they can retain 100% of their proceeds in USD. This retention allows the company to have flexibility and helps them use their foreign currency directly for work-related expenses without frequent conversions. The second benefit is the use of foreign currency funds for legitimate business expenses. IT companies often need to pay for online software tools, digital platforms, and foreign service providers such as Amazon Web Services, Canva, Google Cloud, or Zoom. With the ESFCA, they can use their retained USD to make these payments directly, without seeking prior approval from SBP. For example, if a company called Code Wave Private Limited needs to pay $200 per month for its cloud server and another $100 for design tools, they can directly pay from their ESFCA balance. This facility saves time and foreign exchange loss due to repeated conversions. The third benefit is same-day credit of export proceeds. Bank Islami ensures that when an IT company's export payment is received through normal banking channels, it is credited the same day into the company's account, provided the required documents, invoice or export agreement, are submitted electronically. This means the company does not need to visit the branch physically. For example, if Creative BPO Services receives $5,000 from its Canadian client, the bank staff will process it digitally and credit the funds on the same day. This fast credit process ensures the company has immediate access to its earnings, helping them maintain business cash flow. The fourth major facility is the Foreign Currency (FCY) Debit MasterCard. This is a special debit card linked directly to the ESFCA. It allows IT companies to make both local and international permissible payments using the foreign currency balance available in their ESFCA. The card can be used for online purchases, POS payments, and foreign transactions. For example, Pixel Art Studio can use its MasterCard to pay its freelance designer in the UK $1,200 through an online platform, or to pay for domain renewals or online advertising expenses. The only restriction is that foreign currency cash withdrawal within Pakistan is not allowed. This means if Techline Private Limited tries to withdraw USD cash from an ATM in Karachi, the transaction will be declined, but they can still make online or foreign payments easily. Another important point for staff to explain is that IT companies enjoy tax relief benefits. Companies registered with PSEB can avail up to 75% withholding tax exemption on export proceeds. The bank must verify the PSEB registration and ensure that tax deductions reflect the correct relief level. This facility helps IT companies save a significant portion of their income, encouraging them to bring more export earnings into Pakistan through legal banking channels. In addition to these benefits, IT companies are provided automatic issuance of EPRC, Electronic Proceeds Realization Certificate, and withholding tax certificates through Bank Islami's system. Whenever a company requests these certificates, the bank can generate them electronically without requiring manual follow-up. This simplifies compliance for the customer and builds trust in Bank Islami's digital facilitation approach. The ESFCA account also has special features regarding retention and utilization. Bank staff must ensure that export proceeds are credited according to SBP regulations. By default, 50% or 5,000 United States dollars, whichever is higher, is retained in foreign currency unless the customer submits a written request for a lower retention percentage. The funds in ESFCA can be converted to PKR anytime upon the customer's request. For utilization, companies can use their ESFCA balance for all types of current account payments, such as importing software, paying for foreign services, or repatriating profits to shareholders abroad. However, for capital transactions like foreign equity investments or foreign loan repayments, SBP procedures defined in the Foreign Exchange Manual must be followed. For instance, if NextGen Systems wants to invest $10,000 in its foreign subsidiary, it must follow the proper approval and documentation steps under Chapter 20 of the FE Manual. The ESFCA balances can also be transferred between the same exporter's ESFCA accounts held at different authorized dealers. For example, if NextGen Systems maintains an ESFCA at Bank Islami and another at HBL, it can transfer funds from one to the other upon written request, provided both accounts belong to the same company. However, funds cannot be transferred or credited to any other company's FCY or FE25 account. This rule ensures the retention and use of export proceeds remain transparent and traceable. As bank staff, it is also important to know that no additional requirements apply to open ESFCA accounts for IT companies once they meet the standard account opening criteria. The Centralized Account Opening Department (SAO) will ensure the PKR and ESFCA accounts are correctly linked and opened under the correct IT company SIF code. Staff should remember that IT exporters are special clients. Their business directly brings foreign currency into Pakistan, so the process must be fast, professional, and accurate. When dealing with IT company clients, communication is key. The staff should explain benefits in simple language rather than technical terms. For example, if a company asks, "Why should we open an ESFCA?" the officer can explain, "This account allows you to keep your export dollars in Pakistan and use them directly for your work-related foreign payments without converting to rupees each time." Similarly, if they ask about same-day credit, staff can explain, "As soon as your foreign client sends payment and you share your invoice with us, your funds will be available the same day in your account, no need to visit the branch." Another important aspect for staff to emphasize is digital facilitation. Bank Islami allows IT companies to submit their export invoices, agreements, and transaction requirements electronically. This aligns with the digital nature of IT businesses and saves them time. For instance, if TechVision Private Limited sends its invoices via email to the remittance desk, the bank can process the credit without physical document submission. Staff should promote this convenience actively. Customer education also includes informing them about conversion flexibility. Companies can convert their retained USD into PKR whenever they need local currency. This conversion happens at competitive exchange rates offered by Bank Islami. For example, if the company has $4,000 in its ESFCA and needs to pay local vendors, they can request conversion, and the bank will transfer the equivalent PKR to their local account at the day's best rate. In addition, the staff should highlight the Remittance Facilitation Desk (RFD) service, which is available 24/7 to assist IT companies. The desk can be reached via email at rfd@bankislami.com.pk for any queries or procedural help. This dedicated support unit ensures that IT exporters always have professional guidance available. It's also important to understand what IT companies cannot do. They cannot withdraw foreign currency cash from ATMs or over the counter in Pakistan. They also cannot transfer ESFCA funds to another company's account or use it for unauthorized purposes. Any violation may result in reporting to regulatory authorities. Therefore, staff should guide clients gently but clearly about what is permissible and what is not. To illustrate further, consider a few real-life style examples. Suppose, Digital Soft Private Limited receives $10,000 from a U.S. client. The bank automatically credits $5,000 to the ESFCA and converts $5,000 into PKR. Digital Soft then uses its FCY debit MasterCard to pay $800 to Google Cloud and $500 to Canva for design tools, both directly from its ESFCA balance. A month later, they decide to convert $2,000 from their remaining USD into PKR for office rent. The process is smooth and fully compliant. This example shows how the account structure benefits both the company and the bank. In another case, Creative Designers Hub receives $3,500 from a UK client. Because their monthly export proceeds are below $5,000, they are eligible to retain 100% of the amount in USD. They use this to pay an American freelancer $1,000 for project work and keep the rest for future use. This flexibility gives them control over their business finances without worrying about currency fluctuations. From the bank's perspective, handling IT company accounts requires accuracy, confidentiality, and prompt action. Staff should ensure all documents are scanned and recorded properly, the ESFCA and PKR accounts are linked under the same SIF, and that retention and conversion rules are followed exactly. Any export proceeds received must be verified through authentic supporting documents such as invoices or agreements. The bank should always credit the ESFCA first before conversion, unless the company specifically requests otherwise in writing. The staff must also ensure compliance with SBP circulars, such as FE Circular Letter No. 17 of 2023, which defines the framework for IT exporter facilitation. If in doubt, staff should refer to official links or contact the RFD team. All communication with clients should remain professional, courteous, and supportive. In conclusion, facilitating IT companies is not only about account opening, it's about understanding their unique business model and helping them manage their export earnings efficiently. Every bank staff member should remember that IT companies are contributing valuable foreign exchange to Pakistan. By serving them efficiently, Bank Islami builds stronger client relationships and supports national economic growth. The staff's role is to make the process easy, quick, and transparent, from verifying documents and explaining account benefits to ensuring compliance and providing ongoing support. To summarize in simple words, identify IT companies through PSEB or P at Shaw registration, collect required documents, open both PKR and ESFCA accounts together, explain the 50% or $5,000 retention rule, inform them about permissible usage, highlight the no cash withdrawal restriction, offer the FCY debit MasterCard, and ensure same-day credit for export proceeds. Always educate them about their tax relief, digital processing, and support services. By doing this, the bank staff not only follow SBP regulations but also help IT exporters feel valued, supported, and encouraged to continue bringing their foreign income through official channels.